Before we dive into the list of painful lies or truths, depending on how you want to look at it, I want to share a story that sets the stage for why I did this video. The story is The Emperor's New Investment, and it's about the dangers of financial ignorance and the importance of being honest in investing. The Emperor, known for his vanity and love of fancy investments, was approached by some smooth-talking advisors promising an invisible financial product, Bitcoin, Bitcoin, that only the smartest and most intelligent investors could understand. He was told tales of commoners making untold wealth from this investment. And not to be outdone by his peasants, the king was eager to prove his financial knowledge and skill set. The emperor poured his kingdom's wealth into this mysterious investment, even though he was afraid to admit or tell anyone that he didn't understand the investment. Over time, the emperor's advisors kept reassuring him of his investment success, while in reality, it was nothing but thin air. The emperor, too proud to admit his ignorance, continued to praise the invisible returns. Finally, one day, a young jester pointed out that the investment didn't really exist. This moment of truth forced the emperor to confront his mistakes. He realized his fear of appearing foolish led him to make a catastrophic financial decision. I share this with you for three very important reasons. One, drop your ego. It all started with the emperor's ego. Two, we must always be honest with ourselves, especially if we don't understand something. And three, correct mistakes quickly. Once you know that there's a mistake, fix it immediately. There's no shame in making a mistake. It happens. The shame is in not asking questions to gain insights, not following your gut instincts, following things blindly, and not being honest with yourself about who you are as an investor. With this as a backdrop, let's jump straight in, and I might as well start with one of the topics that is going to get me probably the most hate. Up first, SHTF, stuff might hit the fan, and constitutional silver, not quite the currency of the apocalypse. You know that stash of pre-65 coins you've been hoarding for when the world goes sideways? I kind of hate to break it to you, but that junk silver isn't going to be the post-apocalyptic currency that you imagine, or that people have tried to sell you on. I don't care that you know a handyman that's willing to do work in exchange for ounces of silver or whatever. Those people are far and few between. I would be willing to bet that less than 10% of our population even know that our coins used to contain silver, not to mention that it ended in 1965. And how many of them would know how much silver is in a Mercury dime versus a Roosevelt dime? And for the record, if you actually started thinking about what was the difference, you just proved my point. There isn't a difference in the silver content, and you're a stacker, and you went for that okie doke. So what is the average person going to go for? The second painful lie is the liquidity myth. Generics and big bars aren't good as cash. You know who are the biggest proponents of sovereign coins over generics? The YouTuber creators who fell for this okie doke, and now they just can't admit that sovereigns are actually highly overrated. Shout out to Silver Seeker. He and I are one of the few that I think who have been screaming that you got to do the math to make that decision. But that aside, first, unless the market is absolutely going crazy, your LCS is always buying. The real issue is, are you willing to accept the price that they're offering? Because that changes, no doubt. Second, the only metal that your coin dealer ever questions, it's homemade hand-poured items. And third, your premium kills your stack like nothing else. The money that you have sitting in premiums, be it because you only buy sovereign coins or because you don't buy bigger bars like 10 ounces or larger, that money that is stuck in the premium limits your buying power today. It gets trapped in the coin until you sell it, if you ever sell it. For example, if it's $3 or $4 more for a sovereign and you buy 10 sovereign coins, you could have gotten an extra ounce by just buying generics. And remember, our wealth is measured not in the sovereigns, but is measured in the ounces. And that extra ounce is appreciating with the silver price over time, while your money in your premiums are just sitting there losing value to inflation. If you want to deep dive into this topic, here are two videos where I go into great detail. The links will also be in the description. Third on my list is The Taxman Cometh. Uncle Sam wants his cut. I don't think this is a lie as much as it's just a misunderstanding about the tax law. So let me try to clear it up. The biggest reason for the confusion is there's a major difference between when you buy versus when you sell. And then there's also a difference between what state you live in and then what everyone is subject to as federal taxes. To keep this simple, let's focus on the selling side. When you get ready to sell, these 12 states collect some form of capital gain tax when you sell. The next tax consideration is federal taxes, which everyone has to quote unquote pay at around 28%, depending on your tax bracket and how long you held it. Finally, there are some very specific rules about when your LCS has to report to the government versus when it's quote unquote up to you to report to the government. And it's quite simple and easy to avoid triggering the LCS reporting requirement. In fact, Money Metals has a great article that walks you through this. So go into Google, type in Money Metals, and type in tax selling for precious metals. And that will get you that article. And it's actually really good. It spells it out really well. But as I've said in this video that you can see here, I hope the feds and the DA aren't listening, which I'll link to in the description as well. This means, y'all, I ain't going to admit to doing nothing wrong on video. But what I've heard from a lot of people is that they simply sell below the LCS reporting limits, and then they quote unquote never report their sales. I don't know nothing about that because I always report every taxable event on my taxes because that's the kind of guy I am 100% of the time. Well, I would have, but that one time I lost my whole stack in this horrible boating accident in the middle of the Sahara Desert. Those waters were totally treacherous. And just remember, y'all, the difference between tax avoidance and tax evasion is 3 years and a 6x8 sale with a dude named Tiny, who isn't tiny at all. Wow, that actually sounded pretty bad, but you know what I meant. Next on the list, silver split personality, industrial demand versus safe haven. Silver, oh silver, it's like that friend who can't decide if they want to be a rebel or join the corporate world. The biggest problem with silver is really that silver stackers treat silver like it's a religion. The similarities between silver stackers and religious extremists are actually hilarious. Try saying something about silver to someone that's a true silver stacker and see what happens. Or what happens when you have a different opinion. Watch how they dismiss or attack you or your idea. Another example is one of their core use arguments for silver is for doomsday scenarios or end of the days kind of situations. Here's the reality that we have to accept. The more silver's demand shifts towards industrial use, it takes away from its moneyness and monetary metal premium. Now, before you start hyperventilating, that doesn't mean it will be less value. We just don't know right now. Industrial demand could drive it to being priced like rhodium, or it could make it trade like copper. The point is, we just don't know. As I covered in this video, we aren't exactly draining the COMEX or shifting the supply and demand ratio when there are about 5.5 billion ounces of silver above ground in investment form. I'll also link to that video in the description. Our last lie is paper metals and mining stocks are not quite the real deal. I guess it's only appropriate to end the way I started with a contentious topic. As a community, we overemphasize physical silver and gold. You know, the stuff that would hurt if you dropped it on your foot. And I get it because most of us get introduced to stacking because we went down the rabbit hole of being financially prepared for a doomsday crisis. And in that situation, you're absolutely right that you want to have the real thing. But that doesn't mean that these derivatives don't have value. Let me give you an analogy of your favorite artist coming into town to do a concert. Seeing your favorite artist in person is like the physical metal. Nothing comes close to that experience. But that doesn't mean there aren't some downsides to being in person or times when being at a concert with a bunch of people isn't ideal. For example, during an outbreak or some kind of crisis like that, you may not want to be in a large crowd with a bunch of other people. You might rather stay at home and stream the concert on your TV. Or maybe the cost of the ticket is too much and streaming makes more sense. Or maybe just because you've seen your artist every time they've come to town, you just sit back and throw your headphones on and listen to an album and enjoy it that way. Some of the takeaways are: 1, the importance of having multiple ways to participate, because 2, there's no single best approach for everyone, and 3, each approach has pros and cons, which we need to consider. We all know that physical ownership offers security and tangibility, but we also have to admit that the derivatives provide flexibility, leverage, and some great risk management options. The key is your ownership needs to be based on your goals. My physical is my long-term protection, my wealth preservation, and my paper products can't offer that, but they are my leveraged ways to make money that are more flexible and more liquid. My ETFs provide a baseline, while my developer and producer stocks give me a higher likelihood of outperforming the indexes. While my exploration stocks are like my lottery tickets. Most are going to be losers. Some will get you your money back or maybe a few bucks to buy another snack, and occasionally one will make you some decent bit of money. Like buying the lottery tickets, exploration stocks aren't exactly a great wealth building strategy, but they are a part of it. It has a role. So there you have it, folks. The 5 painful truths about gold and silver that we have to consider while we engage in our pirate-like hoarding habits. In the comments section, what is another lie that we should debunk? What's the best lie to tell the IRS about how you lost your metals? Or simply put an A+ in the comments so that everyone knows that you Always stack smarter and never stop learning. So that brings us to the end of the educational part of this video. And now we're going to transition into the sponsored content. We're going to start off 2025 off on the right foot on the same page about these sponsored videos. First and foremost, these are like commercials that come up during a TV show. I'm not endorsing the company. I am merely sharing information about the company. You have to do your own homework and your own assessment. My commitment to you is that I will always do my best to vet the company, and I will not share a company if I don't believe that they are legit or have a decent shot of being successful. Sometimes I will already own the stock. Sometimes I will buy the stock after I do my due diligence, and sometimes I won't buy at all. Regardless, you shouldn't care. The decision is solely up to you, and you have to do your own homework. Finally, don't be in my comments calling me Judas or other kind of crazy names. I provide what I believe is some of the best educational content on YouTube for you guys in hopes of helping you all for free. And every now and then I get to do a sponsored video that helps support my family. So that's just what it is, folks. With that out of the way, let's talk about what seems to be an extremely exciting investment opportunity in copper. If you've done any research into this, you know there aren't a lot of solid copper opportunities. And the few that are out there are definitely places you would want to go to on a vacation and visit those countries. Okay, that might have been a little mean spirit, but regardless, this is what makes today's sponsor, Giant Mining Corp, a compelling case for copper. They are mining here in the US. While the company trades on the CSE under the ticker BFG, it also is available on the OTC market as BFGFF. Given the way that our world is changing, Giant Mining Corp is the exact type of company that will do exceedingly well over the next 4 years in particular. Why is that? Well, they're a Canadian company exploring and mining for copper, gold, and silver in the United States. And I think being an explorer in the United States over the next 4 years will come as a premium or a bonus under Trump. There can't be a more mining-friendly state with mineral-rich geology than Nevada. Specifically, Giants Mining Corp's flagship project called Majuba Hill is actually located just 150 miles northeast of Reno, Nevada. I can spend a whole video sharing the irrefutable and compelling case for copper, but we all know that. Now, let's just talk stock price for a moment. You know I like it when the price has been bombed out, and this is absolutely the case. This stock traded as high as $8 in 2021, and now it's trading around 20 cents. That's absolutely insane in my mind. And that tells you a ton about how brutal the nature of the mining business is. While the stock has been plummeting, all Giant has done is continue to explore and target the estimated range of somewhere between 50 million and 100 million tons of copper. And while the grades are only 0.15 to 0.3%, there's also a higher grade zone potential with about 10 to 20 million tons with 0.4 to 0.8% copper. You wouldn't know any of that looking at the stock price, as the company has gone from a market cap of 100 million in February 2021 to approximately 7 million today. This decline represents a potential opportunity for investors, as the current valuation may not fully reflect Majuba's Hill project's potential. But that's a risk, and you got to take that into consideration. Giant Mining Corp has the potential to be an amazing asset, but this isn't mining, so you know that's far from a certainty. What we know for sure is there isn't enough copper, and at some point, copper miners are going to need more investment if they're going to bring more metal to the market. Giant is potentially one of those opportunities, but this feels like one of those stocks that you buy today, lock it away, and don't look at for 5 years, and you'll probably be very pleased with yourself then. But the ride along the way may not be fun. We all know mining is a long and slow process, but that doesn't mean you can't make some decent money in the short term when you buy something that has fallen so far. Keep your eye out as they continue expanding the mineralization at depth and laterally in hopes of finding an additional high-grade copper zone. If they do, that stock will absolutely move fast. Majuba Hill has the potential to provide significant domestic supply of copper to the U.S., and we know that's very important. With the favorable supply and demand dynamics in the promising Majuba Hill project, Giant Mining deserves some consideration. Go do your due diligence, though. Don't listen to me. Go check them out at their website, which is giantminingcorp.com, trading on the CSE under the ticker BFG and on the OTC as BFGFF.